Hey everyone! Today we're diving into the fascinating world of Egypt's banking sector and the massive liquidity numbers that have been making headlines. Now, I know what you might be thinking. Another finance report? But trust me, this one's a real eye-opener. So buckle up as we explore the numbers, uncover some interesting insights, and maybe even challenge some common misconceptions. Let's get started. First things first, the big number that's been making waves. Egypt's banking sector recorded a staggering EGP 15.26 trillion in domestic liquidity during the first half of 2026. That's a lot of zeros, and it's a figure that's got economists and investors alike paying attention. But what does it really mean? Well, in my opinion, it's a testament to the resilience and growth of Egypt's economy. It suggests that businesses and individuals are confident enough to keep their money within the country's banking system, which is a positive sign for the financial health of the nation. Now let's break down some of the key figures. The Central Bank of Egypt, CBE, reported a decline in domestic liquidity from EGP 15.33 trillion in May to EGP 15.26 trillion in June. This might seem like a minor decrease, but it's worth noting that the money supply itself dropped from EGP 4.502 trillion to EGP 4.492 trillion. This indicates that while the overall liquidity is still substantial, there might be a slight shift in how money is being managed within the system. Interestingly, the currency in circulation outside the banking system also took a hit, falling from EGP 1.737 trillion to EGP 1.649 trillion. One of the most intriguing aspects of this data is the breakdown of non-government local currency deposits. The CBE revealed that these deposits increased to EGP 10.347 trillion in June, up from EGP 10.168 trillion in May. This suggests that businesses and individuals are increasingly choosing to keep their money in local currency within the banking system. Now, what makes this really interesting is the distribution. The public business sector accounted for EGP 112.87 billion. The private business sector held EGP 1.478 trillion. And the household sector contributed EGP 1.252 trillion. This shows a diverse range of entities contributing to the overall liquidity, which is a healthy sign for the economy. Now let's shift our focus to foreign currency deposits. The CBE's data reveals a slight decline in total non-government foreign currency deposits, from EGP 3.425 trillion in May to EGP 3.264 trillion in June. This could be attributed to various factors, including economic policies or global market trends. Foreign currency demand deposits also took a hit, falling from EGP 853.973 billion to EGP 827.608 billion. The public business sector held EGP 42.987 billion. The private business sector had EGP 549.708 billion, and the household sector accounted for EGP 234.972 billion. Interestingly, foreign currency time deposits and savings certificates also declined, reaching EGP 2.436 trillion in June, with the household sector remaining the largest holder. So what does all this data imply? Well, in my opinion, it suggests that Egypt's banking sector is not only robust but also dynamic. The slight fluctuations in liquidity and the diverse distribution of deposits indicate a well-functioning financial system. However, it also raises a deeper question. What factors are driving these changes? Are they purely economic, or are there external influences at play? These are the kinds of questions that economists and investors should be asking as they analyze these numbers. In conclusion, Egypt's banking sector liquidity figures for the first half of 2026 are a fascinating insight into the country's economic health. They reveal a confident and diverse financial landscape, with both local and foreign currency deposits playing a significant role. As we continue to monitor these trends, it will be crucial to understand the underlying factors driving these changes. What do you think? What insights or questions do these numbers raise for you? Let me know in the comments below. And don't forget to like and subscribe for more insightful content like this.